Okay, good evening, everyone. Can everyone hear me loud and clear? If you can hear me, can give me a thumbs up by a reaction. All right, great. Okay, let's start proper. Okay, good evening. Welcome to AMP Learning Circle's Digital Investments. We're so glad that you can join us today. My name is Farah and I'm from AMP Singapore. So before we start, actually, could I get your help to actually rename yourself to the name you registered with for ease of registration on our end? We have a few with just one name, or we have we had a Ward 12 just now. Yeah, so could I just get your help to do that? Okay, so before we start the session proper, do give me a few minutes to share about the organizer. So AMP Singapore is a registered charity from the year 1991. And since then, we have been providing social services to the public. Our social services arm consists of the Debt Advisory Center, Family Services, Marriage Hub, Training and Education, and our youth units. The Learning Circle series is part of our AMPx initiative, which is a movement to serve the community's interests by creating an ecosystem of learning and sharing of best practices. So AMP is a charity organization which runs largely on donations. So please feel free to donate to AMP so that you can run more programs like this. You can just scan the QR code on this my left, right? In our Zoom background, or you can just go to amp.org.sg. Okay, this particular session is also partnered with Islamic Finance at Singapore, or otherwise known as IF@SG. IF@SG was born from a discussion on how they could make Islamic finance more accessible for anyone. So in August 2018, they started as a WhatsApp group to facilitate knowledge sharing between students, scholars, and finance professionals. They have since expanded to organize events such as community roundtables and live webinars where people can connect, share information, and start projects that ultimately bring value to the community. You can find out more at their website, www.ifsingapore.org. Okay, for today's learning circle, we are very privileged to have Dr. Farrukh Habib as our trainer for today. Dr. Farrukh Habib is an expert in Sharia law, finance, and fintech. He is an advisor, trainer, and product developer by profession with strong educational background and vast global experience of more than 9 years. He's involved in the Islamic fintech and halal digital economy, focusing on crowdfunding, micro-investments, tokenization, decentralized economy, halal supply chain management, and Sharia compliance. Before we begin, I'd like to also remind everyone that this is a recorded session. So could I get everyone's help to open your cameras right now so that we can take a group photo before we pass the mic to Dr. Farrukh? Can we see your lovely faces, please? Right. Hi, Daniel. There are two Daniels, Muhammad Daniel and Dana Kamal. Hi, Muaz. Hi, Susanne. Hi, Naj. Naj, could you change your name to your full name so that we can double confirm? For those of you who may not be so comfortable turning on your cameras, or you're not in a situation where you can, maybe you can just give me a reaction, maybe a heart or a thumbs up. Okay, no, do it like when we say 1, 2, 3. Okay, hi Amsha, nice to see you. Hi Afan. Anyone else coming on? Okay, I think maybe we'll take the screenshot now. Wan, you ready?
Everyone can smile on to your camera.
Oh, do the emote the vaccine. Yeah.
Do your reactions. Okay. 3, 2, 1. Okay. Can.
All right. Thanks, Wan. Okay, so Dr. Farrukh, the floor is yours.
Okay, perfect. So can you hear me? Okay, perfect. Let me just open up first my presentation, and then inshallah I will be talking about it. Perfect. So Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh, and hello everyone. I'm Dr. Farrukh Habib. I am based in Dubai. I have two companies, one in Dubai and the other one is in London. So I'm co-founder and managing director of both the companies. Alif Technologies, we provide consultancy and advisory services, platform development and educational programs, workshops, trainings. And with Sharia experts, we provide Sharia advisory services for Web3 projects, for example, blockchain-based projects, AI, artificial intelligence, metaverse, NFT, crypto, etc. So with that, inshallah, I will be discussing today about digital investments, and we will be also touching some of the Sharia issues in digital investment platforms. But before that, let me just zoom out a little bit and see that, okay, where we are at the moment. Let's take a step back and see the whole world, the world we live in at the moment, and how this world has been impacted by COVID-19. So if you look at right now, the problem is we saw that, okay, there was a virus, and that virus became so rampant that it transformed itself into health crisis. And those health crises became pandemic. Pandemic means like it was a global level health crisis. And those health crises transformed themselves into economic crisis. So we saw that there were some death rates, there were some coronavirus cases at worldwide, and different jurisdictions, different countries, different nations, they found themselves into a very difficult situation, and they fought with this situation very, I would say, very bravely and strategically according to their own situation. But regardless, because it became, it triggered the economic crisis. So we saw that real GDP growth became stagnant. And in fact, like in some region, it was minus. For example, if you look on my slides and see that the dark red areas was where the growth was minus 3% at least. And in orange areas, you will see that it was, in dark red areas, it was more than minus 3%. And in the orange areas, it is from 0 to minus 3%. Light green were like a little bit, those areas were like a little bit lucky because they had a little bit of growth, like from 0% to 3%. And then dark green areas were where we saw like 3 to 6% growth rate. But overall, we saw that it was almost 3 to 4% drop in the real GDP growth. And then because of those economic crises, we also observed social issues, social crisis. For example, unemployment rate and inflation rate. For example, if you look at the chart on my left side, unemployment rate, so dark green areas, these are the countries which have less than 5% rate. So like they are a little bit safe in terms of unemployment rate. But if you look at the red zone, then this is where it was more than 20%. Dark orange area is 15%, and light orange area is 10 to 15%, which is still very high. And if you look at the inflation rate, then you can see that like dark green countries have less than 0% inflation rate, which is, I mean, okay. But if you go to the other side, for example, red, it is 25% plus. And then if you look at the dark orange area, which is basically the most of the world, so you see that like it is 10 to 25% inflation rate, which is super high. So this is basically the after effect spillover of COVID-19 and economic crisis. Right now, we haven't recovered fully, from those crises. But what we have observed is that like we are trying to have some different jurisdiction, different nations, different countries. They are trying to have some measures so that like they can fight back with this kind of situation. Because although like Corona is the health crisis have been a little bit under control, but then we also have to ensure that economic crisis and social crisis are also checked. And because of that, Islamic finance industry also faced a lot of problem, because normally, if you look at Islamic finance industry, it is the home of mostly developing countries or underdeveloped countries. 57, if you look at the 57 OIC countries, most of them are either underdeveloped or developing countries. Because of that, these economies hit very badly during the COVID, and Islamic finance industry as a whole also got a hit. So Islamic finance assets showed a strong growth until 2019, but due to the COVID-19, it has been a setback for the whole industry. In 2020, there was zero growth, and now we are. But the thing is, like the Islamic finance industry is now taking pace, and we are hoping that this industry will again start its growth with CAGR of 5% until 2024. And if this estimate is true, then we would see that the industry would reach to $3.69 trillion by 2024. And it will be there will be a growth of 7.2% by 2024. So this is what we are looking at. Previously, it was a double-digit growth, by the way. So in this situation where we are looking at many jurisdictions, for example, OIC countries, if you look at Muslim majority countries, but also the countries which are very impactful in terms of Islamic finance industry, halal industry, etc., and Muslim community overall, we have seen that many people got affected, and they have realized that in this situation where there are social crisis, economic crisis, they cannot rely on one income source. That's why people have been looking and they are in search of different investment platforms, so that like they have this motive. There are two, three motives behind it. Number one is, of course, job security, and then also the realization that their current income source is not sufficient to cover their expenses. Number two is about people would like to basically ensure that their savings are not depleted. So because due to the inflation, we can see that like their savings are going lower and lower. And the third motive is basically to survive and to ensure that the next generations, they will have sustainability. So these are basically different motives behind people's intention to look for investments. And it turned out that during the COVID-19, digital investments have started taking pace, and then started getting traction from various people. And many people got into so many different investment products online, although like there was a huge rise of scam and frauds. And until now, we can see that like there are so many frauds in the market, but people are truly looking for some genuine sources, alternative sources of income, where they can invest, they can learn how to invest, and then they can learn how to basically financially take control of their lives. So this is basically the motive behind these people. And that's why we have seen that digital investments became a very viable solution. But let me just tell you also that digital investments is a very huge and wide scope area. So it's not concentrated on one thing. There are so many different sectors within digital investments. Like, for example, if you have money, or if you want to invest online, then there are so many sources, so many platforms, so many avenues for you to park your investments and try to have some decent income. So I will be just going through them one by one, and I will try to summarize them a little bit here. And inshallah, what I will do is, like, I would like to have more interaction in this session. So please feel free to ask questions. Once I completed my presentation, then you can ask questions, whatever you have. And then inshallah, I will be sparing more time for the Q&A so that we can have an interactive session. So number one is actually digital banking, robo-advisory services, AIPs, and APMs. I will be just giving you a definition, and then I will tell you how it is basically helping the digital banking to grow. First one is robo-advisors. So robo-advisors are basically digital platforms offering automated algorithm-driven financial planning services with little or no human oversight. So this is robo-advisors. For example, if you look at Robinhood or a Stash, so you would know that, okay, when you are making your own profile, it asks you a few questions and try to understand your risk appetite. So based on your risk appetite, then it suggests you that, okay, how can you basically build up your portfolio where you will have some risky assets, but a portion of it will go to the riskless assets, etc. So it will give you a combination of that based on your risk appetite. So this is actually the service of robo-advisors. But you need to understand that robo-advisors, when they work, they initially take a test, they collect some data from you, and based on that, they say that, okay, this person is either risk taker or risk averse, or he needs to save that much, he needs to basically take that portion of risky assets in his portfolio, etc. So they decided on one-time basis, and then that's it. Automated investment programs, on the other hand, they are the solutions that enable a consumer to invest using money that is automatically diverted to investment portfolio. So it basically, it's like AIP is like not one-off thing, rather it is a continuous process. And automated portfolio management is basically so AIPs is basically like, again, a one-off thing, but it's a solution where they tell you that, okay, where you can invest using your own money. And it can basically divert that. For example, I have a bank account, and I want to also invest automatically into certain securities, but I'm too lazy, or because of I am busy with other things, I cannot actually on regular basis invest in those securities. What I can do is I can basically put an instruction, automatic instruction, or I can use an AIP, which is automated investment program, that can basically gradually on regular basis can invest some money from my bank account into those securities or into those investment platforms. I can tell that the AIP that, okay, every week you need to take out $10 or $100 from my account and then invest them into securities, or on monthly basis or on daily basis. Even like some of the AIPs, they are so efficient that they can directly connect with your debit card, credit card, and also your bank account. So if, let's suppose that you go to a Starbucks coffee shop and you buy coffee and it costs you $9.50. So like it's $9.50, but $9.50, but it deducts basically a rounded figure, which is $10. And what it will do is like it will pay the amount of the price for the coffee, which is $9.50, and the remaining 50 cents automatically will go to the investment account. So this is also can happen through AIPs. And then automated portfolio management is like APM, is a continuous process where unlike robo-advisors and AIPs, APM is focused on regular adjustments of your portfolio. It is characterized by certain longevity, and the implementation of investment decision is taken care of by algorithm. And it is not client's responsibility that how you are going to invest in it or how you are going to adjust your portfolio. It will be automatically adjusted accordingly. So this is basically APM. And then, so as you can see that these are the tools in the in the digital banking, where if you want to open an account in a digital bank, then you can also leverage on these type of services. But it is not exclusively for digital banks. Other than digital banks, there are some standalone robo-advisors, AIP or APMs out there in the market, where you can have a traditional bank account, but you can link your traditional bank account with those services. So you can also do that, or there are independent platforms available in the market where you can subscribe and you can open an account, and afterwards you can keep investing through these platforms into securities or different avenues. But now there are some Sharia issues with this type of approach. Number one is lack of human engagement, because these are most of the time these robo-advisors, AIPs and APMs are self-learning programs. They take decisions independently without human intervention, and they take decisions on the basis of data analytics and artificial intelligence. But because of this reason that, okay, there is a Sharia issue that your counterparties should be human beings, which are actually the subject matter of Islamic law. So because of that, there is an issue of lack of human engagement. So how can we ensure that there is a human liability, there is a human responsibility there? Then this is basically a very big challenge from the Sharia perspective. Number two is legal entity. It's also a very big problem, because most of these algorithms like robo-advisors, AIPs and APMs, they are not separate legal entities. They are just algorithms or computer software based on AI and data decision-making processes. Because of that, it is a very big challenge that how you will ensure that, okay, it has a legal entity and it is recognized in the Islamic law. And can you consider the algorithm as a party of a transaction? Because these algorithms will feed themselves on the data, and afterwards they are going to make decisions on your own behalf. So can we say that there is so much gharar because of this? So for example, these kind of legal entities in the US, like for example, robo-advisors are legally equivalent to human advisors. But there is a lack of research and lack of understanding among the Sharia scholars. And the question is that should Islamic law and fiqh also take the same approach, that we recognize these robo-advisors, AIPs and APMs as legal entities and party of a contract or not? So this is question, very big question for Sharia scholars. And I haven't seen any good quality research until now, because I think that the issue is very deep at the moment. I raised this issue in some of the previous conferences in front of Sharia scholars, and they appreciated the fact that this question has been brought forward to them. But they also realized that there is no fundamental research backing their arguments or backing their understanding about this issue. Lack of knowledge is again a problem, because if let's suppose that I say that I am the person who is making decision, although like I am using robo-advisor as my assistant, but or AIPs or APMs, but the problem is that like these AIPs are going to take some decision which I will not be aware of. So can I take responsibility of those decisions? And regardless of the fact that I do not know what is it. So this is again a very big problem, and it can create a problem of gharar, which is like lack of knowledge. So no knowledge of algorithm and investment strategy is out there. So the users normally do not understand it properly, or they tend to just ignore it. As long as they can receive profits, they are still okay with that. So I think that is again a problem, because you need to understand that how these algorithms are working, what is the investment strategy. Number two is like scale of funds is decided automatically. So I gave you an example, I explained to you this AIPs. So sometimes you actually do not know that how much money is going to be invested in a certain security or in my portfolio. So you just set it up that, okay, this is basically I'm going to do, this is the amount which I'm going to do. Sometimes they actually try to learn your expenses and saving habits. And on the basis of that, they decide that, okay, how much you are supposed to save and how much you are supposed to spend on monthly basis or weekly basis. On that basis, they try to basically take out money from your account and invest it. Again, there is a problem because sometimes you really do not know that what is the scale of funds which is decided automatically to be invested in the investment venues. And then there is no disclosure of transactional level information. This is also, again, a problem because all these factors actually contribute in actually realizing the concern that these are and there is a lack of knowledge, and it can basically direct you or take you to the level where there is horror in the transaction. And then there is an issue of governance, also Sharia governance issues. For example, I was reading some of the research and I found that majority, like 52% of the so-called Islamic fintech companies are uncertified and without any Sharia monitoring. So this is again a big issue of Sharia governance. They feel that we do not need Sharia boards or Sharia guidance as long as we claim that, okay, we are Sharia compliant, and then we claim that, okay, we are ethical, we are social, and or as long as we can copy and paste a traditional Islamic finance product into our system, then it is still okay. But I have found out that, okay, there are so many instances where the product was considered by those Islamic fintech, so-called Islamic fintech or the startup projects, that it is Sharia compliant, but it was not. Now, I can just give you an example that recently Wahid Invest, which is a Islamic robo-advisory based out of USA, they have been fined by the US Securities and Exchange Commission for not having procedures and processes for Sharia compliance. And they have recently paid a penalty of $300,000. So this is a very, very genuine case for us to understand that what is going on in the market at the moment. And as a user, we also should be aware of that, okay, if we are using a certain robo-advisory platform and if it is Sharia compliant, then who are the Sharia advisors to that platform, and then how they are doing their processes. So we also need to be understand these processes and Sharia governance framework which they have adopted. And then there is another way of doing in digital investments, which is, I think, a very, very new area, and it is expanding very rapidly. Many people are trying to get into this space, which is crypto. I am not going into the basics of crypto, that what is it, what is not, but here in this slide, I can tell you that, okay, this is the very detailed categorization which I have come up with. And you can see that like crypto assets can be divided into different categories. So I do not want to call each and every crypto or digital asset as a currency. It is a misnomer. So we should be calling them as crypto assets because they have evolved from being a currency to the level where they are different types of assets. So yes, of course, one category of crypto assets is currency, but it doesn't mean that all crypto assets are currencies, number one. So if you keep this point in your mind, then you can easily understand that there are different types of crypto assets. I am not saying this list is exhaustive, but I have tried my best to put all types of crypto assets in this chart. So you can see that, like, first one is cryptocurrencies, which are actually currencies in crypto form or in digital form. They can be further divided into unstable coins, for example, Bitcoin, Ethereum. So these are cryptocurrencies, and also they are unstable coins because their prices get fluctuated and there is no reserve backing it. But there are stable coins as well. Some of them, like USDT, USDC, these are the crypto assets which are currencies, and they are backed by real assets, for example, dollar reserves. These stable coins can be further divided into two. Number one is private currencies like USDC and USDT. And on the other hand, you can have CBDCs, which are government central bank issued digital currencies. So these are again stable coins. But this is basically about cryptocurrencies. Then you have tokens. non-fungible tokens, also NFTs, and hybrid assets. Hybrid is a mixture of all things. For example, like sometimes it is a mixture of many things, or sometimes it is a mixture of few things. So it is very difficult to decide that whether it is a security token, it is a cryptocurrency, it is an NFT or a governance token, etc. But tokens can be divided further into utility token, which gives you a right or a utility or a benefit in some form at the platform. And then you have a second type, which is governance token. Governance token gives you a right to vote in a platform. And security tokens are basically those tokens which are created with the investments in mind. And they can be further divided into asset-backed tokens, for example, gold, silver-backed tokens, commodity-backed tokens, and real estate-backed tokens. So these are asset-backed tokens. And then you have equity tokens, which is a representation of shares or stocks of a company and ownership interest in a company or project through the crypto tokens. And then investment tokens, this is a type where you can see some of the ETFs or other what do we call it? Other funds, units of funds in the form of crypto assets. So this is basically, I have tried to charted the whole map of different types of crypto assets. If you understand this, then you can easily say that, okay, we can apply different Sharia rulings to different categories. So it is wrong to ask questions that, okay, all crypto are all cryptos halal or haram? And if there is an answer also accordingly that, okay, saying that all cryptos are haram or all cryptos are halal, then again, I would say that it's a wrong statement. So each and every crypto needs a separate Sharia analysis, and based on that, we can decide whether it is a halal or haram. If we understand that, then I can tell you that, okay, there are few aspects of it. If you consider only halal crypto assets, then you can do two things. Number one is you can either trade them. So trading through exchanges and P2P transactions can be done, or you can use trading bots and automated investments. So remember that I was talking about robo-advisors, AIPs, and APMs. They can also be applicable in the form of crypto trading. And then you also have ETFs and mutual funds based on cryptos. So this is basically a type where you can get involved in the halal crypto assets in the form of trading. So like you can do trading, and then you can pick up the halal crypto assets according to your risk appetite. And then there is another approach towards that, which is like project investment. So it's basically like you are going as an early stage investor into a project, and then you invest in it, and then later on, once the project is matured, then you take an exit. So this is another approach towards digital investments in the crypto space. So for example, like you can be part of initial token sales, where different projects are offering their tokens and raising funds. And there is another structure which is like direct equity investment. So like you can do direct equity investment into the crypto projects. And then there is a third way of doing it, like through VC funds or portfolio managers who are actually looking and analyzing and doing their due diligence and risk management. They are also doing their risk analysis of different crypto projects, and you can also invest through them in the space. So these are basically, I can tell you that, okay, these are actually centralized CFI, like centralized finance approaches towards crypto investment. So we call it CFI, which is centralized finance approach, because as you can see that, like if you are doing trading, so then it will be most of the time through exchanges, through financial intermediaries, and those financial intermediaries are regulated in a certain jurisdiction. So which means that like they are centralized financial system, part of the centralized financial system. But on the other hand, then you can have decentralized financial system where you are directly going into the projects, or you are going directly into the investment. You are receiving your profits or losses directly without any financial intermediary. So this is another approach in crypto investments. So there are the three main approaches in DeFi investment products, and you can do that. For example, number one is a staking. This is a concept which is basically based on proof of stake algorithm consensus blockchain. For example, Ethereum has already started converting on going direct. Going completely on proof of stake. It started as a proof of work, but then they started to convert themselves into proof of stake, and almost like they have already done a pilot on Ropsten testnet, and it has already been successful recently. So which means that like now Ethereum is going fully on proof of stake system. On the other hand, Bitcoin is a proof of work system, which needs a lot of mining power, and to increase your mining power, you need to have a lot of resources, energy, etc. So for example, you need to have electricity, you need to have powerful hardware, and then you need to have cooling system, etc., etc. So these are basically the attributes of proof of work consensus blockchains. But proof of stake came as an efficient way of staking and then earning cryptocurrencies and crypto assets. And this is basically a process where it does not require a lot of energy consumption. It does not require a lot of hardware power or energy, electricity, or cooling systems. So this is basically a very good way of investing. But of course, I will be telling you later that, okay, overall, the crypto space is very complex and prone to frauds and scams. So because of that, you have to be very careful and about choosing any staking mechanism or a staking protocol before investing. So you have to do your own research about that. So about the staking, so the investors who stake the most will be chosen to verify transactions that take place on that network. So when you are verifying the transactions, there are actually two types of incentives you are looking at. Number one is you are looking at newly minted coins, which will be distributed to the validators, transaction validators. And second thing is like you will be collecting the transaction fees. So these are the two main incentives for the people who are doing staking. And with that, they actually try to earn their profits. Then there is another concept which is in the DeFi space is quite famous, and that is liquidity mining. So what does it is basically like different users contribute a portion of their crypto assets to various liquidity pools. Because if you look at the centralized exchanges, they have a book or order book which they have to maintain about buy and sell. On the other hand, you have decentralized exchanges where there is no order book, but they run on the AMM, which is automated market making process. In order for the AMM to work, we need liquidity from different people and from different users. When these people provide that liquidity, they are entitled to get the transaction fees. So this is basically the main concept. When they provide this liquidity, they are entitled to get a cut or a split in the transaction fees. So, and these pools are very, very important for decentralized exchanges. So these pools in exchanges are actually offering, they offer you profits in the form of tokens and fees. So this is liquidity mining, the concept of it. But then there is another concept, which is a little bit, I would say, an advanced version of liquidity mining, which is called yield farming. And it is like liquidity mining, but farmers also receive LP tokens, liquidity providing provision token, LP tokens, and also governance tokens. And it involves multi-layer of strategies that use LP tokens or governance tokens for further enhanced profits. For example, if you have your funds and you provide as a liquidity provider in a pool, then you can earn LP tokens. Once you have that LP tokens, you can further stake them, or you can further provide a liquidity through them to enhance your yield or enhance your profits. This is basically sometimes gets more complicated, and that's why we can differentiate between liquidity mining and yield farming, saying that, okay, liquidity mining is basically providing liquidity to certain pools, and yield farming is something like it's a complex strategy where further you go a step further and then you actually stake those LP tokens somewhere else to increase your yield or profit. So, but then again, there are some Sharia issues with that. For example, cryptos as a subject matter is still a debate among the Sharia scholars, whether they are halal or haram. But I think that the best way to do this is basically to have a Sharia screening criteria for existing crypto projects and see that like whether they are Sharia compliant or not. This is basically what I'm actually doing at the moment. Second thing is like for crypto trading, again, there should be some Sharia guidelines and rulings for trading cryptos. I am again involved in some of the projects where I'm articulating these guidelines and rulings for trading cryptos, and crypto exchanges also needs to be Sharia compliant. For example, some of the cryptos in the Middle East, they have been certified as Sharia compliant, but some of them are still not Sharia compliant, but still you can use them in a Sharia compliant manner. But I think that moving forward, there has to be an option for the users on crypto exchanges where they can choose that, okay, whether they want a Sharia compliant account or not. So I think that this is again a very new topic, but I think that the crypto exchanges also have realized that, okay, there is a need for the market for this kind of product. Traditional investment strategies, again, this is again a problem, like evaluation of project structure from Sharia perspective. This is again something we need to look at. And then DeFi investment strategies like the yield farming, liquidity mining. So we have to look at that whether Sharia compliance of what we need to look at is basically that whether the underlying blockchain platform and native token and business model is Sharia compliant or not. We also need to check that investing strategies may involve riba due to interest-based transactions. So we also need to avoid that. And uncertainty due to clarity in contractual relationship is also very important. For example, sometimes you go to a protocol and you provide your funds to that protocol, but still you are not clear that whether this protocol or the owner of that protocol or the project and what is your legal status. So these are, and what is the contractual relationship between the two parties. One party is providing funds, but on what basis, whether it is a loan contract or whether it's an investment product or whatever it is. And then sometimes you also do not understand the strategy itself. So because of that, there as a user, there is a lot of gharar and uncertainty which has to be addressed. And then the third approach, which I wanted to cover in this presentation about digital investment, is about crowdfunding platforms. I will be just going through them very rapidly because I believe that you would understand it very easily. It's a straightforward thing that there are few types of crowdfunding platform. For example, donation-based crowdfunding platform, they collect donation and charities. And then there is another one, reward-based crowdfunding platform, where fundraisers present investor with several tiers of reward based on their pledge amount. So like investors can come in and invest the amount, and based on the volume of their investment, they can unlock some tiers of rewards. So this is basically for rewards-based crowdfunding platform. And then you have equity-based crowdfunding platforms where they offer you equity in certain projects, and then at the maturity level, you want to get exit. And debt-based crowdfunding platforms are basically lending and borrowing platforms where people borrow on interest, and then they give back principal and interest both to the lenders. Royalty-based crowdfunding platform are also there. Funders receive a small portion of the profit generated once the enterprise or project becomes profitable. So this is again another mechanism of crowdfunding. And then now I have seen another emerging crowdfunding platforms, a type of crowdfunding platform, which is like real estate crowdfunding platforms. This is for investors looking to participate in real estate without bothering for obtaining a traditional loan or the requirement to purchase the entire property. So like what you can do is you can fractionalize the property, and then you instead of borrowing loans, big loans to acquire a property, you can basically whatever amount of funds you have, you can invest in those real estate crowdfunding platforms directly and on fractional basis. So you will not be able to have the full ownership of the house, but then you will be owning a part of it. These crowdfunding platforms can be transformed into Islamic crowdfunding platform. For example, we can use Musharaka and Mudaraba, which are Islamic partnership contracts, and then you can craft or develop royalty-based crowdfunding platforms, equity-based crowdfunding platform, and real estate crowdfunding platforms on the basis of Musharaka and Mudaraba. And that based crowdfunding platform can be structured in a Sharia compliant manner through Murabaha transactions, and the reward-based crowdfunding platforms can be structured with the usage of Islamic contract, which is called Ju'ala. And Islamic charity platform like donation-based crowdfunding platforms can be structured on the basis of Islamic charity like zakat, waqf, sadaqat, etc. So I think that these are the few things, and I think Ethis Venture and Ethis Crowd is one of the leading Islamic crowdfunding platform. They have equity-based crowdfunding platform. They also have Murabaha-based transactions also, and then they also have donation-based crowdfunding platform. And there are a few others which are coming in the market soon, inshallah. So lastly, I would like to just touch up with few other concepts that forex trading, commodity trading, stocks and share trading. These are other modes of digital investments. Like you can go online and then you can start your account, and then you can start investing in those avenues. But there are few Sharia issues. For example, most of the time what I have seen is like in forex trading, Sharia rules of currency exchange, buy or surf, are not properly followed. So this is again a problem. And then most of the time, I have also observed that derivatives and CFDs contracts for differences and leverage and margin trading are also there, which makes it not Sharia compliant. And same goes for commodity trading, stocks and shares trading, that most of the time they are not actual stocks trading or shares trading or commodity trading. Rather, you are ended up trading actually the CFDs or derivatives or other financial products which are not Sharia compliant. So this is something which I wanted to highlight in front of you. And now I think that I would welcome all your questions or comments, inshallah. Thank you so much.
Okay. I think there's some questions in the chat, and I see Raul raising his hand. I will allow the participants to unmute themselves now, so you can ask your questions directly. But Dr. Farrukh, do you want to address the questions in the chat first?
Okay, so
the first question that we have is from Zul Ikram. Is there a Sharia screening criteria guideline to refer to screen on our own?
Sharia screening guideline for what? Okay, so we already have some guidelines of Sharia on Sharia screening for stocks and shares, but for cryptos we do not have them, and it is very complicated, I must tell you, because I have been doing the review and the Sharia screening for various different crypto projects. I think that I have done hundreds of them. The problem is, like, every time I need to adjust the criteria, it is not very static, it's dynamic. So as you can see, some people have the understanding that you can have financial reports and a similar approach, you can adopt a similar approach as compared to stocks and shares. But in stocks and shares, you can still have something which is static, like a fixed standard, and then you can say that whether this company is Sharia compliant or not. But in cryptos, every project is different from another company, from different. So like there are right now, it's almost 30,000 projects. These projects are different than from Bitcoin itself. So Bitcoin, Ethereum, Litecoin, etc. And then there are 30,000 projects. So every project needs to be screened separately, and you cannot just have a blanket ruling. So I think unfortunately the problem is like there is no established Sharia standard for that. But yeah, so we are still working to standardize it. And then there is another question, like I take my digital assets and sell it at a market higher than the one which is lower. Sorry, I don't understand the question.
Maybe Yusuf, do you want to unmute yourself to explain your question?
Can I take my digital assets and sell it at a market higher than the one which is lower? Okay, so I assume that the brother is asking the question that, okay, if you have, let's suppose, one digital asset or crypto asset, and you go to the market and then you exchange it with a at a higher price, I think. So I mean, yes, of course you can do that as long as your digital asset or the crypto asset is Sharia compliant and you are properly following the Sharia guidelines for exchange.
Okay, I think a couple of the other participants mentioned that I think that Yusuf is referring to arbitrage, buy from one platform to sell another. Both Zul and Afan said this. There's the last few messages in the chat.
Okay, so I think he's referring to arbitrage, buy from one platform, sell at another. Okay, so arbitrage is not a problem as long as, again, you have your token, which is Sharia compliant, and then you buy it on the spot, and then you transfer it to another exchange or another platform, or you go into another market and then sell it at a higher price. So I think that there is no problem with that. So you can always find some arbitrage opportunities which are Sharia compliant. So I think that on spot trading, it's not a problem. And then centralized financial examples. So centralized is basically what the traditional Islamic finance is. So you have centralized authorities like banks, financial institution, central banks, etc. So this is the whole centralized system. Decentralized system, as opposed to this, is something where you do not have financial intermediaries, or even if they have, their role is different from the centralized financial world. So that's how actually you work in the decentralized financial system, where you are interacting directly with the smart contracts, and you do not need to go through KYC or due diligence, etc. You will own your products, your private keys, public keys, and if there is a loss, you have to bear it. You are responsible for that. Nobody else would be bearing that loss for you. So these are the traits and features of a decentralized finance.
Okay, I think Raj raised his hand. Raj, do you want to ask your question?
Yes. Assalamu alaikum, Dr. Farrukh.
Walaikum assalam wa rahmatullahi wa barakatuh.
Nice to see you. Dr. Farrukh, I just have a question on your slide on robo trading. Is it okay to share that? Because I just want to try and understand the Sharia concern on human engagement, legal entity, knowledge, and the governance. Right?
So yeah.
Okay,
yeah,
if I record them correctly, take the first one. Where's the Sharia concern for human engagement in a robo trading?
Yeah, so for example, let's suppose that we have algorithms on both sides, and we have allocated some funds to those algorithms. Now, these algorithms are transacting those funds on the basis of the data they have acquired. Okay, So there are sale and purchase transaction. I'm just giving you a very simple example.
Sure.
So in that sense, now I am on one side, I own the algorithm, for example, but still I do not know that how many transactions it is going to do, because it is again based on the analysis which I have set, or even I do not have to set it, somebody else have to set it, right? And on the basis of that analysis, this algorithm is going to take some decision that, okay, whether I have to readjust my portfolio or I have to sell this asset and buy that asset, for example. And on the other side also, there is an algorithm. Now, the question of human engagement is that, number one is who will take the responsibility and liability of these transactions, number one. Number two, so you can answer that question, I can answer that question, but what I'm trying to point out here is that, like, there is no established standard and understanding among the Sharia scholars.
Okay, I see what you mean. Okay.
Number two, so as long as I do not know, the transaction can happen at a nanosecond speed.
Correct.
So I really do not know that what my algorithm is purchasing and what it is selling, right? So there is gharar also again. If I am the owner of that algorithm, at least I should know that, okay, at what point in time I have been liable to a certain asset or not.
Okay.
So this is again a question of gharar also.
Sure.
And legal entity is also again that if, let's suppose, something happened,
right,
your algorithm got some bugs or errors, and because of that, it has bought a lot of assets on your behalf.
Okay.
And then you say, okay, so sorry, there was a bug and there is an error, and that I mean, can you sue that algorithm in the court of law, or it will be me who is responsible? But I do not know what was my algorithm doing in the market. So these are some fundamental basic questions, which I think that we can come up with a solution, but actually the debate has to start among the Sharia scholars, and they have to come up with the Sharia rulings about that.
Okay, makes sense. Thank you very much, Dr. Farrukh.
Most welcome.
Okay, we had a question from Daniel Kamal. How about trading gold in Forex?
Trading gold in Forex?
Yeah.
Okay. So in Forex, normally you do the trading of fiat money, like if you have US dollar, you sell it for Japanese yen, and then you sell this Japanese yen and buy Singaporean dollar, etc. So in Forex trading, what I have said before is most of the time I have seen that I have talked to some of the Forex trading companies as well. What they have told me is that, like, it's only a netting off system in the software, in the form of software they have. They are not going out to buy the currencies directly from the market. So there is no physical transfer of the ownership of those currencies. For example, if I go to a Forex company and I open my account and I say, okay, I am putting in $50,000 over there, and now I want to buy Japanese yen. So it will show it will show that, okay, you have bought Japanese yen in the software, but actually the company is not going to buy it for certain reasons. Number one, there is a transaction cost, and because of the physical delivery, there will be a delay in the transaction, because after like few seconds, maybe it is possible that I will just sell my Japanese yen and buy British pound. So because of that, to actually cope up with the speed of transaction, they say that we are not directly going and buying those physical currencies in our system. So we are just having a netting off system, and sometimes if we do, it's basically CFDs, like contracts for differences. So what will happen is, let's suppose that I buy Japanese yen with my $50,000, and the moment it goes up, I sell it and against US dollar again, and I make $1,000 profit, for example. So this netting off system will tell me that, okay, you have made $1,000 profit, but there was no actual buying and selling of the Japanese yen. So this is because of this, there is a huge Sharia issue, because you are not having the ownership, and there is no transfer of ownership, and it's only a netting off system. And that's why some Sharia scholars understood it as a form of gambling, where you are just without taking any ownership, you are just netting off the profits and losses.
Okay, I think it's kind of related to the next question by Juaria. If you trade in Forex without speculation, overnight interest fees and leverage or margin, would that be permissible? There are some Islamic Forex platforms which offer this.
Again, I would say no. Why? Because, okay, I do understand that some of the Forex companies, they offer you an Islamic account where they do not charge you swap fees. But it is not the matter of swap fees only. The Sharia issue is bigger than that. The Sharia issue is that, like, you are not actually buying those currencies. So if I tell you that Sharia allows me that today I can go in the market and buy actually US dollar, number one. After 2 days, 3 days, let's suppose, I see that like the US dollar has gone up against Singaporean dollar. So I go again to the market and sell my US dollar and buy Singaporean dollar. And then I keep doing that. So if, as long as these currencies are with me and as long as I am following the Bay'u-Sarf currency exchange rulings, then it is fine. But the problem is if I'm not actually buying those currencies and not taking the ownership, then regardless of whether you are charging a swap fees or not, whether you are getting involved in the margin trading or not, these are secondary issues. Again, so this transaction will not be valid from the Sharia perspective. So most of the time, I would recommend people that stay away from Forex, unless and until you actually find a company where they say, okay, we are physically buying those currencies for you.
Okay, then next question from Jada is, which digital asset has intrinsic value? Are there any?
Yeah, so actually, if you look at the question of intrinsic value, so it comes from the intrinsic benefit. So if there is a crypto asset or digital asset that has intrinsic benefit, then definitely it has an intrinsic value. And that value is translated into price. For example, Bitcoin. So Bitcoin, what is the intrinsic benefit of Bitcoin? It's basically, it is a borderless system. You can transfer value from one side to another, and you can do it very securely, transparently. There is no issue of double spending like counterfeiting, and I cannot fraud people by saying that, okay, I have this this much Bitcoin in my wallet and I can send it to you, because on blockchain you can verify that whether I have it or not. So in that sense, this is basically the intrinsic benefit of Bitcoin system, and it facilitates the transactions over a peer-to-peer network. Because of that, you can say that it has an intrinsic value, and that value can be translated into some price. So right now, if we say that Bitcoin has a price of $30,000, then it means that this price is a reflection of the intrinsic value, and that intrinsic value was generated through the intrinsic benefit underneath the project. But there are some arguments for Bitcoin specifically that there is no intrinsic value. But regardless of whether Bitcoin, you accept that or not, you have to accept that other projects are not like Bitcoin. So not every crypto asset is like Bitcoin. There are a few projects. For example, Ethereum. The intrinsic benefit of Ethereum is that like this blockchain is Turing complete, which means that like you can run smart contracts on it. When you run smart contracts on it, then this is basically a benefit. Like you can create different decentralized application on that system. And that's basically, we are seeing that, okay, there are so many other projects based on Ethereum. So this is basically the intrinsic benefit of Ethereum and value of Ethereum. And because of that, right now you can see that like the Ether, which is the token of Ethereum, has a value or price of around $17 or $1,800. So, and then there are so many other projects. Some, like I said before, I showed you in my chart that these are the categories of different crypto assets. So some of them, they represent equity and share. Some of them, they represent the ownership of a piece of land, real estate backed tokens. And then some of them, they represent commodities, for example, gold, silver, precious metals. Some of them, they represent art, digital art. So this is again an intrinsic benefit and intrinsic value in them. So these tokens are a representation of either a business, either a project, or a commodity, or something else. So that's how we create the intrinsic value for these tokens and say that, okay, there is a price for that. Yeah, but I think that, again, I will give you a disclaimer that not every project is what they say or convey to you. So you have to check it, because then in this space, there are so much scams and frauds, definitely.
Okay, I think Jada had a couple of comments. Yeah, perceived value or benefit is not actual value. It cannot be intrinsic value in itself. And intrinsic benefit is an argument to cover up for dealing in riba.
Sorry, okay. So perceived value or benefit is not actual value. Do not fool yourself. It cannot be intrinsic value in itself. Benefit is an argument to cover. No, I don't think so, because again, there are actual projects which can deliver some real economic value to the society. And I don't think that, I'm not saying that, okay, all of the projects are like that, but some projects, they do have it. And because of that, I truly believe that they have their intrinsic value. Token is just a representation of the project itself. Token is, as a product, I don't see that like it's it should have intrinsic, I mean, what do we call it? Like, it should have a proper system, because it is only a reflection of what we are doing at the moment. For example, there are different projects. I'm working with few projects. For example, there is a Singaporean company which tokenizes gold. So they have exact value of gold, and on the basis of that, they issue tokens. So if you want to say that, okay, no, this is a backdoor of riba, I don't buy that, because there is an intrinsic value derived from the gold itself, physical gold. There is another project where they offer financial products. So if you say no, financial products does not have intrinsic value, so then I will say that there is no Islamic bank in the world that can say that we are Islamic and halal. Then you would, we will go back to the argument that this is all rubbish and this is all riba.
Thank you for that, Dr. Farrukh. Okay, Afan has a question. May I ask the Sharia compliance stance on liquidity, mining, and staking? Typically, proof of stake token staking will have a stated APY percentage. Is that a profit guarantee which operates similar to interest-bearing vehicles? Asking as ETH will migrate to POS and allow for staking.
Yeah, so there are a few things you need to understand for proof of stake blockchain. Right now, so many terminologies have been misused in the crypto space. For example, everybody is saying that, okay, whenever you lock your token in a smart contract, then it is a staking. But no, we need to understand that why you are locking your tokens in the smart contract. What are you locking? What is the logic behind the smart contract? If you cannot understand that, and you cannot say that it is Sharia compliant, then of course, like it is not Sharia compliant. Now, so first of all, you need to understand that the token you are having is Sharia compliant or halal. Number two is, like, when you are locking your or staking your tokens, then what is the mechanism? What you are actually doing? Why you are doing that? So you need to understand it, and if there is a Sharia non-compliant factor in it or not, we have to analyze this. Number three is like how you are driving your profits or earning more income through that staking. So this is again another question you need to answer. Now, there is a fourth question is that, okay, when you are staking your tokens and funds into that smart contract, what this smart contract is doing behind the scene? I mean, how it is utilizing those funds. So it may be possible that that smart contract is designed for a lending and borrowing mechanism. So when it takes your funds, then it basically gives out these funds as a lending and borrow through a lending and borrowing mechanism to other people, to the borrowers, and it collects interest from them. So again, your profit will not be justified as Sharia compliant, because it's the smart contract is designed for lending and borrowing.
Okay, hang on. Okay, Ashar is asking your opinion on DAO and tokenization. Done?
Let me just, your opinion on DAO, DAO and tokenization. So DAO is a way where you can create your decentralized autonomous organization, which means that you can have a full governance system on blockchain. As long as you can ensure that this whole governance system is Sharia compliant, you can have Sharia DAOs as well. So this is basically one of my idea where I am trying to create a Sharia governance DAO. And tokenization, again, you need to understand that it is only a token which is on chain and it can be transferred on the blockchain network. The main thing is not the token itself, although like there is a question that, okay, how this token is being issued, but the main primary issue is basically what does it represent? What is behind this token? Because it is a reflection of value. So what is the source of that value and how this token derives the value from that source? These are the two main questions we need to ask. Other than that, I think that tokenization is a good way to do things because it gives you frictionless transfer of ownership.
Okay, there's one last question from Zainal. If you could summarize and give general fiqh ruling on the different digital investment platforms. Number one, robo-advisors on halal, forex haram, cryptocurrency, etc., to help general investors to safely navigate.
Yes, I can. But again, the problem is it has so much detail into it. If I give you a general blanket ruling, then again it will be a big problem. If I say, okay, robo-advisors are not halal, this is not true. There are some Islamic robo-advisors in the domain. So again, and forex is, so far to my knowledge, I have seen that most of the time it is based on CFDs. Because of that, I don't think that it is Sharia compliant, but it doesn't mean that currency exchange itself is haram. You need to understand, because Sharia has principles and rulings regarding currency exchange. So you can do currency exchange in a Sharia compliant manner. So again, I would not say that it is completely haram, but then if you are not, if somebody is not following the Sharia rules, then it will be haram. Cryptocurrencies, again, I would say they are crypto assets, and there are different types of assets. Some of them are halal, some of them are haram. We need to actually see that, okay, which one is which. So again, with each and everything, robo-advisors, I can say it has more chances to become Sharia compliant, but we have to address the fundamental issues. Forex trading, I see it very difficult to become Sharia compliant, and crypto assets is basically plus minus 50-50.
Okay, Afan says thank you, Doctor, for the information. His views are aligned for clarification for regarding the staking. Okay, Zul Ikram has a question. He says, thank you for answering all these questions, Doctor. Would a Sharia compliant protocol built beside or on top of existing protocols be a viable Sharia compliant future? For example, like more non-lending or borrowing pools in CRV, or must it be on its own?
Yeah, I think that this is possible, definitely. I am working with some of the projects where we are analyzing different strategies for liquidity mining and also staking. So yes, it is possible, but it's a little bit complex, and that's why we are working hard to ensure that there is no Sharia, or there is no haram factor in it. So yes, but the way I have understood the whole domain, I can say that like it is possible.
Okay, I think that's all the questions we have in the chats right now. I think, Doctor, you have some time for some more questions, yes?
Yes, I have.
Yeah. Anyone has any questions to ask, you can feel free to unmute yourself and just ask, or you can just drop your questions in the chat. Anyone? Okay, if there are no further questions, perhaps let's wrap up. Last call for questions. Oh, okay, Afan has another question. Is there a list of tokens that are safe for our consideration?
No, actually, that is okay. Safe means two things. Number one is either it is halal or haram, and number two is whether it is safe to invest in it or not. So again, for the first aspect, we have a list of halal tokens actually, or halal protocols, of course, because I have been doing it for a very long time now. But it doesn't mean that it's a financial advice that you should go for halal protocols or tokens and then invest in it, because again, it may not be safe. Because financial aspect of it and risk management is different thing. So it can happen that there is a halal protocol, but business-wise, it was not sound, and the market acceptability was lower, and because of that, the project goes bankrupt or it crashed or defaulted. So it can happen. So these are the two different things, basically, by the way. Like being safe doesn't mean that if it is halal, then it is safe to also invest in it, or if it is safe to invest in, then it means that it is halal. So both are different. Both are two different things.
Okay, yeah, Amira is asking, likewise for Sharia compliance robo-advisors, any list of robo-advisors specifically for Singapore?
For Singapore, I am not sure. I need to look up. There are few robo-advisory services, but I haven't come across specifically in Singapore.
Oh, Ridwan shared that there's Wahid and Sarwa. Ridwan
Yes.
is the co-founder of IFSG, everyone, so you could reach out to him.
So Wahid is actually US based, and Sarwa, I think, is UAE based, Dubai based. But specifically for Singapore, I'm not sure.
Afan had a follow-up to the question of the tokens. Are you able to list a few that we can take examples from?
It's still difficult because, okay, I tell you another thing, that just like stocks and shares, that sometimes it happened that, okay, this stock is Sharia compliant, and then after 6 months or after like 3 months, 6 months or 1 year, you go back to that and then you review it. So maybe it is possible that the status has been changed. Because of that, if I tell you that Bitcoin is halal, and I think that it may not change its status, but other protocols, again, I have to relook on regular basis. So I can tell you that, okay, currently Ethereum is halal, but it doesn't mean that it will remain halal forever. So I have to check it on regular basis and then readjust the list of Sharia compliant tokens and protocols. So this is like a continuous job where I have to look on regular basis that this is Sharia compliant and this is not. Sometimes I include new ones and then I exclude the older ones because they become Sharia non-compliant.
Okay, Muaz has a question. Which part of crypto has lending services? How do I know it does lending services? Is lending money in itself haram or only interest-based lending haram?
So lending money is not haram, of course, but if there is a protocol, definitely this protocol would be charging interest, for example. So if they are charging interest, then of course, like it will not be Sharia compliant. So it will be haram. But yes, you are right that interest-free lending and borrowing is Sharia compliant. It's basically when you charge interest in a lending and borrowing mechanism, then it becomes haram.
Okay, Daniel's question is, for companies that have debt, but their net worth is worth more than their debt, is it okay to buy their stocks?
Yeah, so there, for example, for stocks, there is a certain criteria that their debt should not, like interest-bearing debt, should not be more than 1/3. So, for example, in some countries, it is 30% of their total assets, and in some or like market capitalization, some of them they use the book value, and then some of them they use market cap. But so there interest-bearing debt should not be, as a rule of thumb, I can say, like, if it is more than 1/3, then again, it is not Sharia compliant in most of the screening criteria for stocks. So Malaysia, it has its own screening criteria. IOP has proposed another criteria. We have Dow Jones, FTSE, MSCI. They have their own different criteria. And then in Pakistan, we have implemented another different criteria for Sharia screening of stocks. So, but as a rule of thumb, I can see that like this is very common, that they say that as long as your interest-bearing debt is not more than 1/3, then it is okay.
Okay, I'm sure is asking, could you share about Marhaba DeFi?
So yeah, Marhaba DeFi is a project where I'm the core team member, and I'm the chairman of the Sharia Governance Board. In Marhaba DeFi, we are trying to create an Islamic decentralized financial system. Decentralized means that it will run without financial intermediaries like Islamic banks or financial institution, and everything will be Sharia compliant. So far, we have launched 2 products. So number one is halal crypto wallet, which is, you can say in banking terms, is like a deposit product. So where you can send, receive, and swap your crypto assets, and all of them are halal, by the way. So it does not allow you to transact with non-halal crypto assets. Then we have NFT marketplace in Marhaba, which is a halal NFT marketplace where people can create NFTs for representing different types of assets, and they can sell it and buy it. Third one is actually we are working on a crypto investment product, halal one. And that's where basically we are considering different ideas of staking, liquidity mining, etc. And then we are also trying to create a decentralized aggregator, DEX aggregator, which is decentralized exchange aggregator, which can basically combine all the decentralized exchanges and facilitate the halal transactions on different routes, so that like those transactions have a minimum slippage and the fastest route.
Okay, Rauf asks, how can we come to know if crypto assets are halal or haram? Is there any platform or updated list?
No, there are some platforms, but they do not have they do not have a mechanism to update the list on regular basis. So like some of the platforms, they issued a list, but this list is number one, either there is a problem that okay, this list is not backed by the Sharia scholars. It was basically an understanding of a normal person, and then he issued it. Or if it is done by Sharia scholar, then again, the problem is like whether it is updated on regular basis or not. Because like I said before, it's a very continuous job, and it needs regular updates.
I think Daniel's question has been answered by Ridwan regarding the Cypherbo advisor. Jada has another question. Is it true that self-trading takes place in DeFi Marhaba issuance in order to build trading volume?
Is it true that self-trading takes place in DeFi Marhaba issuance in order to build trading volume? No, I don't understand this question. Self-trading takes place in DeFi Marhaba. But I think that it is better if you have a specific questions for Marhaba, you can ask them, because they have Telegram group and they also have their own social channels. It would be better like if you can ask these questions which are specific to Marhaba there.
Thanks for answering some questions, Ridwan.
Mm-hmm.
Any other questions for now? We have about 20 minutes or so. Anyone wants to unmute themselves, please feel free. Okay. Okay, I think that looks like, okay, Moaz, yield farming is a lending service, so I shall stay away from it. Okay, Ridwan has answered for Saif, robo-advisor. If the fund is FTIF Sharia funds, then it is halal.
Okay. Regarding yield farming, what I can say is like it is not always lending and borrowing. But it is super complicated. Like you have to look into the system, a smart contract, and then the concept that okay, whether it is lending and borrowing or is something different. Only then you will be able to decide that whether it is Sharia compliant or not. If you would like to stay away, I think that this is better for now, unless and until you have more Sharia scholars endorsing it and then having more confidence from the regulatory and legal side as well. So until then, I think that I would say like I do not encourage people who are reluctant to accept crypto or get involved in it. So I do not encourage them because this is their own risk appetite. So not everybody is a risk taker, and not everybody can afford to take risk. So that's why I do not encourage them. But all I can say to them is basically that there is a possibility that crypto can be halal and can be used in a halal way.
Thank you for that, Dr. Farrukh. Okay, I think we shall wrap up the session. Ashari, most of investors are able to interpret smart contracts. Is there a question to that, Ashari? Or not able to?
Most of investors are able to interpret a smart contracts, not able to. Yes, but of course, normally what happens is that if you cannot interpret the smart contract, at least like the business logic and the economic outcome is already reflected in the white paper and the concept paper. So you need to understand it that, okay, whether this concept paper or the business logic is Sharia compliant or not, because sometimes I do understand that the smart contract itself is just a it's just the like combination of different lines of codes, and not everybody can understand those codes, but at least like you will be able to understand through white paper, through the website, etc., that what is the business logic behind it and what is the economic outcome. So if that is Sharia compliant, then of course, like you can say that it is Sharia compliant. Otherwise, I think that if it says it is not Sharia compliant, then yeah, stay away from it.
Okay, thank you very much, Dr. Farrukh. I think we'll wrap up today's session. Okay, we have a feedback form for you to fill in. Amira, could you just help me share the screen? Okay, yeah, one has dropped the links in the chat as well. We've shared our social media channels as well as our Telegram channels if you want to keep up to date. If you want to have more discussions like this on finance, you can join the IF@SG Telegram channel. And yeah, there's a bunch of Instagram accounts for you to follow if you're keen on following more events like this. Okay, yeah, if you want to donate to AMP, you can scan your banking app, the QR code on the left. And could I get your assistance to quickly fill out the feedback form, the QR code on the right.
Thank you so much, Jazakallah khaira, for having me in this session. And it was wonderful to interact with you guys. It was a deep pleasure for me. Jazakallah khair.
Thank you so much, Dr. Farrukh. For the rest, if you are okay with the feedback form, you can take your leave.
Okay, thank you.
Dr. Farrukh, I think they can keep in touch with you on Instagram as well, yes?
Yes. I mean, so what you can approach me through LinkedIn. LinkedIn is a little bit better as compared to other social platform, because although like I do have them, but I'm not very active on Instagram and Twitter or Telegram. Although like I do have them, but I would appreciate like if you can find me on LinkedIn and then try to approach me from there, inshallah, then I will be able to respond to your queries or have a conversation there.
Okay, great. Yeah, I think you can just search for, oh yeah, Ridwan has dropped Dr. Farrukh's LinkedIn.
Yeah, so this is my LinkedIn.
Okay, we'll just wait for everyone to fill in.